talked about some of why that is and what's going on with it, but I wanted to jump into this. I thought this was a good one.
Oh,
So,
this is fun.
consumer expectations for stocks hit 3-year high, which means people are expecting the stock market to go up. Consumers are most bullish they've been on the outlook of stocks since May of 2021. It's right around the pandemic. The latest survey of consumer expectations from the Federal Reserve Bank of New York showed the mean perceived probability that stocks will be higher in the next 12 months rose to 40.5% in May, up from 38.7% in April. So that's good. So people are more optimistic now about the market, which means more investing, which is part of the reason why when I showed you that graph earlier of the market here, it's been up. I mean, if you look at just year to date, we had a kind of a flub here in April, May, but it's up. But if you look at overall from the year, it is way up. It went from 4,200 to now it's 54. That's a huge jump in a year. If you're invested in the market right now, you are raking it in. I know all my clients are. And this is kind of a side note for personal finance stuff. This is when you want to retire, is when markets are
Yeah,
up.
I was gonna say this makes those near retirees pretty happy and feeling pretty hopeful.
Yeah. Because when you're retiring and the market's down, you have to withdraw money. Well, you're withdrawing money at a lower point. It's sort of a loss, right? Your money doesn't last as long. Even if the markets go up later on, you've bled so much out of it, you have less to compound. So if you retire, you want to retire when the markets are going up because then your money will last even longer than it normally would. So that's always a good sign. So, you know, that's why I was always panicking during the recession, or not the recession, during the pandemic when all those people retired. And I was like, well, maybe we should see what the markets are going to do before because if they tank and you just retired, you are really screwed. So, fortunately, they didn't. The Treasury dumped like $1 trillion into it. So, but yeah, so that's it. I just wanted to say all that. That's good stuff for financial news. Do you have anything you want to add to maybe the retirement thing?
No, no, you know what? I'm honestly glad to hear this report just because I feel like, Duncan, we've spent years with people just sort of waiting for the other shoe to drop with the
Right.
expectation that we were going into recession. I feel like people have been expecting us to go into recession for a solid 5+ years at this point. That
Right.
hasn't actually truly transpired. So having this um, information coming out that actually people are expecting things to go well in the stock market is kind of refreshing
Oh,
after
absolutely.
5+ years of doom, gloom, and this, you
Oh
know.
no! Oh my God! Yeah. Well, the thing about it too is we've been dealing with that. We dealt with that all last year. Remember? And we covered a bunch of these guys doing the, oh, it's gonna go into recession. You need to put all your money in gold shit, right? We were making fun of them because they're just selling gold. And yet, when did that recession happen? Fox News said we were going to be in a recession all last year. Never occurred. And we've been in a Goldilocks economy
Right.
for pretty much the last year. I mean, it's just
Well,
horseshit.
I mean, I don't blame people for wondering when that will hit because it tends to be cyclical, you know, and like roughly every 10 years or so, we end up hitting one. So, you know, when you kind of look loosely at those patterns, people go, should be hitting, should be
Yeah,
hitting.
the
But
thing.
like, but you can't necessarily guarantee just because, you know, something happened that it's going to pan out that way.
Yeah, well, it used to be that we used to say the 7-year cycle, right? Roughly, because there was a little brief one with Clinton in whatever '94, but it was really nothing. And then 2001 was the next one, and that was pretty bad. And then there was some stuff in 2002 and three, and then 2008 was the next one. And then they thought, okay, well then if 2008, that means 2015, because it's a 7-year cycle. And yet we never really hit that recession. And even COVID, we didn't really hit a recession. I mean, you could argue it, but I would think so because it bounced back once we got vaccines. It bounced back pretty quick.
Right?
So
That's true.
yeah, I mean, so that's kind of the thing is I don't know that applies that much anymore. I mean, it did for a while there, I don't know anymore that it does. That sort of that cycle goal. I mean, there will be a recession again at some point, but it's usually something serious that causes it. We probably won't see it coming until it's right there in front of us. So it's kind of hard to sit down and go, oh, I'm going to predict a recession. Well, I don't know. Maybe North Korea fires a nuke and hits Tokyo. And then, we're at war. Then there'd be a massive recession. Right? The only way there wouldn't be is because the war machine would kick up and the government would spend trillions of dollars. Which is bad because they're those, do-nothing government jobs that Fox hates. The military.
Right.
So, anyway.